Good evening. Now, for those of you who are not watching this live broadcast live right now, then I've started this 6-7 minutes early just to have a chat with the people as they start coming in. So, if you are watching this as a recording, then by all means watch me as I'm chatting away with people. But we're due to officially start in about 6 minutes. So, but I've got the recording running here at the moment. So let's just see um, if anyone's out there at the moment. It's weird when you do these live broadcasts because I can't see who's here in attendance. All I can see is if we get some correspondence. So for anyone who is here at the moment, by all means do say hello and confirm that you can see my screen, and you can probably see me in the bottom left corner, I think, of your screen there. So that would be useful if if some people could put some posts up, and then I'll see those comments starting to come through. Oh, good evening. Hello, Gonzabina. Hi, Davey. Nice to see you. Regular Davey. So it looks like it's all working here. This is good. And good vibes. Nice. From Dilemma. Hi, Ian. Hi, Rahul. And so there's plenty of people coming in and starting to say hi. I think, hi, Dubai. And I think because I use a streaming software that streams this into YouTube. I think when you post something, it probably has a several second delay to when I actually see it. But I think that's what tends to happen there. So yeah, you can see my screen. So it looks like I've got it on the NASDAQ here currently, and we'll be going through, of course, a little bit on the markets here tonight as well. So I've got the dog sitting down next to me here, and so we are all set. He's not very happy because I haven't had a chance to take him out since this morning. So we can't officially start at the moment. We've still got 4 minutes to go. What do you think of these markets then? Bit volatile out there, isn't it? I thought, I must admit, first thing this morning, I think following yesterday's reversals in the stock markets, I thought that we might hold on to that today. And as I'm literally pointing at my screen, that NASDAQ is coming down for its June lows, from what I can see there. I've got what the screen you're looking at is the screen that I'm pointing at here. It's my bottom right hand screen. But as I've got my back slightly towards that at the moment, I'm looking at another one showing the same charts above. Pound. I know, the pound. Well, that's where it's all been at, isn't it? That's where. But what can you say? I mean, it's just relentless. The volatility. I'm seeing in the pound. We're seeing 50 pips in a minute. You don't normally see that in the pound dollar. Its average range just a month or so ago would have been about 120 pips. Its average daily range, and yet we can see 100 pips in 5 minutes at the moment. Euro dollar's done what, 200 pips today? I don't think how many pips the pound's done. So if I change this over to the pound, let's have a quick look. So its highs of, God, it got to 111. Wow. And its low of 107.60. So it's done 240 pips today on the pound dollar as well. These are big ranges. You can sort of see how, in relative terms, the size of these ranges here relative to prior price action through a lot of it. There has been a reasonable amount of volatility this year anyway, but it comes in clusters, and also, as we can see, way bigger volatility there at the moment. So I'm going to leave this on, I think, not the S&P, but probably on that NASDAQ first and foremost. But yes, crazy moves, as you say, in the pound there. And how are we doing for time? Oh, I can get started soon. Um, so yeah, um, I think, and you see me um, doing this um, uh, when I'm putting other commentary out, or whether it's on my social media, like on Twitter or whatever. Um, the thing that I am always concerned about in times like this is the amount of traders who are, you know, losing loads of money during this, because that's the reality. The bulk of traders during this sort of time will be losing money far quicker than they otherwise would be, because they get excited about the volatility, and so for some people they're making a lot of money, but I'm concerned about the larger number of people who are not trading correctly. They're trading on emotions, or emotions are making up their trading, even if they've got technical setups they're using. So yeah, evening Lobo. And so that's my always my concern there. In these markets are good, but we have to always trade responsibly and not get over too excited there. Hi, John. So I think we're just coming into 7 o'clock here, so we can now officially get cracking with tonight's webinar. I just literally came on to the YouTube the other day on Sunday, I think it was. I thought, oh yeah, I'll do an update on the challenge, and setting it all up, and so at least I could be better at it this time. So welcome to this update on the challenge. I think the last update I did was it early July? Some of you will probably tell me when the last one was. I'd have to go into if I go into my YouTube, actually, I should be able to find it myself. So if I have a quick look and see when it was. Trading challenge 2-year anniversary. It was on the 30th of June. Right. Okay. So I will answer your question in a bit, Chiller. What I would do is I'm going to now do a little bit of a presentation, but it's not. This is me, so I don't do official presentations most of the time. So I'm going to do a run through of the trading challenge, and then I will take. I'm going to talk about the markets here tonight. I'm going to talk about how I'm trading the markets. So that might help you, Chiller, in answering your question, really. And then I'll obviously take questions through this as well. So what we'll do first of all is we'll go through the challenge itself. Like I said, I did an update in July, and it's on the YouTube channel here anyway, so you can go and watch that update that I did there. So what I don't really need to do is scroll back over the last two, because the challenge is now just over 2 years old, so about 2 years 3 months, I think. And so 2 years and 3 months. And so I don't need to scroll back over all of the historical trades. But what I am going to do is to go through some of those historical trades just to the beginning of this year. So we're going to do that here tonight as well. I'm going to talk to you about basically where I've been making my money. Okay. And so I'm a professional money manager as well. I run some funds. I also professionally manage money for some of our clients as well. They actually have accounts hooked up to a mirrored account, so to speak, of this trading challenge account that I've been trading for 2 years. So our members now get to do that as well if they want to. So for me, doing these challenges is a bit of fun nowadays. It's always gives me something to focus on, because I don't have goals per se with my main pension money that I trade anymore, and I'm not trading that in an aggressive manner. So to actually have these trading challenges where I am trading a bit more aggressively, it still is a bit of fun for me to do that. So let's get into this and go through the trading challenge performance here. So now which one's which? Uh, right, okay. So I'm just going to go straight in, give you the numbers, and then we'll take it from there. Okay. So I think what was the performance in? I've forgotten what the performance was when we covered it off in at the end of June. I've already forgotten what it was. I'm assuming it was sitting around about just around about 200%. So this is where we've got to now. So hopefully you can see this all right. So this is the account summary from 2 years ago. How much P&L has been made. And so it is now, as of yesterday's date, this is up to the 28th of September, in broker reports. They'll only going to they'll only take the data up to, even though I downloaded this today, it won't include today's figures, just because, or if there's any change from yesterday to today, just because they'll only take you up to the last value date, as they call it. So that's why it's only up to yesterday. But today, actually, it's up slightly more, um, because of some open positions that I've got. Um, so a 282% return now over that period. If I go to the account value again, it was only a few months ago, 3 months ago, that I last did this update, and I said I would do another update when I got to my target. My target was 70,000. So I said, I don't know when the next target was going to be hit, but I said, well, okay, well, when we get to 70,000, I'll do an update on it, or roughly around that sort of time. So we've breached that level, and so what now? Really, I'm going to go through the numbers with you. I'm going to go through the trades transactions with you, and then I'm going to look at the charts as well and talk to you about how I'm trading, maybe to give some of you some ideas. Some people here this evening might be members. I'm not sure, because everyone's got different names on here. But and our members obviously see what I'm doing all of the time. They're seeing my trades as I take them. So what can I say on this? Firstly, the target. So I've done what I set out to do. Okay, so 2 years ago, I put 20,000 in. It immediately went into a drawdown, and that's where I've taken the dates from. Um, but the it's typical, you start a trading challenge and you immediately go into a drawdown. But I've got to that 70,000. What next? And I think I said this in the summer, that I don't want to stop doing these challenges, because I do find them, they're good for me to um, give me something a bit more meaty from an aggressive trading perspective to get my teeth into. I'm now, like I said, I'm trading some of our members' accounts as well. They've got accounts. I say some, it's quite a few. Um, and so it does give me that extra bit of goal setting, really. So the next logical target, I wanted to get to 70 because we started at 20. It's a 50,000 increase. But so the next logical target, I was saying to our members the other day, might as well be £100,000. So that's going to be the next target on here. And as I always say, I don't know how long it's going to take me to get to 100,000. That's basically from where we currently are, about another 50% gain from where we are. It could take me a year to do that. I don't know. I only aim to do about 50% in a year, roughly. On a good year, some years can exceed that, and other years are not going to. So I don't know how long it will take. It could happen, it could take a year. It could take 4 months for all I know. I really don't know. So that's going to be the goal anyway, to get to 100,000. And I think when as I go along, one thing that I had an idea of as well is I'd like to, because for a lot of traders, they don't. They've never withdrawn money from a brokerage account. So at some point along the line, I'm going to demonstrate making a withdrawal, and I'll do it live on the platform as well. So I'll do that at some point as well. So yeah, this is the equity curve. So it's not a perfect thing, and they generally aren't. These equity curves in the real world, they're not perfect, as you can see from. We went through all this before, but I went for a period from basically from the account value perspective, topping out around about 60K, but that was value. This is account value. That's how your brokers are going to be looking at your balance. So I was in a load of open positions. That wasn't closed positions at that time. That was just including open profits. Just so happens that my open positions at that time then dropped all the way back, and so but you don't see that within the account value. So it looks like it was a lot higher. But anyway, so then went through the best part of a year to get back to where I'd been previously. Bearing in mind I'm swing trading, I don't care about trying to make money every day or every week. All I care about, and all you should care about, is being the best trader you can be and following your processes. And if you do that, you're putting yourself in a much better position to be profitable. But if you start thinking about the money all of the time, I've got to make money this week, I've got to make money this month, then you're focusing on the wrong thing rather than focusing on being the best trader you can. If you focus on all of that, the results will eventually take care of themselves. Every trader is going to go through periods whereby it's just not clicking, and you've got to persevere with that. So for me as a swing trader here, um, there were some lovely runs that I was having through all of this period, but then my open profits would then just sometimes just roll back over. So that's what was going on through that period. And then really since the beginning of this year, you can see that the account has just been going up quite um, relatively aggressively through since the beginning of this year or early this year. That's January, it says there. So yeah, so maybe it was about February or so. And so that's where I'm at as it currently stands. Okay. I don't think there's much other data in it. They're just slightly different. This gives you the equity. So you can see I went into that initial drawdown at the beginning of the challenge. And then ever since then, it's been in profit overall. It's just been degrees of flat periods, pullback periods. That's the reality of trading. So, but ultimately, if you follow your processes, it should work out for you, and that's what's being. There's nothing else in there I need to cover off. So that's that one. And then what I thought I'd also show is the P&L from the beginning of the year. Oh, hello. Oh, Rachel's just come in. My wife's just walked in the door, and I was thinking, who's that? Wasn't expecting her to come home. She made me jump. So anyway, so since the beginning of the year, this is the P&L 33,000. So it's done 84% since the beginning of the year, essentially. So I wanted to show that, and then you can see that equity curve a little bit more zoomed in on this report because this is showing the P&L since the beginning of the year. So because it's zoomed in, you can sort of see those equities a little bit, those peaks and troughs a little bit more clearly there. So then I wanted to go through the trades executed because this is really where you see everything that's going on in the trades executed. So I've taken this down to the bottom. This is the, I think I'm right at the bottom. Yeah, I've scrolled to the bottom here, and I'm going to scroll up because these are the first trades of the year. Oh, there's nothing on there. Don't know why this says booked amount 0. I haven't got a clue what those ones are. There's lots of zeros in here. I never know what those are, unless it's, oh, it might be netting, might be real-time netting. But anyway, because it's important, coming back to Chiller, who was it was saying, how do I get my trade setups to have a higher win rate? Why do you need to? That would be what I would say. I have a low win rate and I've made 200, what was it? 280 something percent there over the last two years, 3 months. So what do you need a high win rate for? All that says to me is that you need to work on your mindset because the most profitable traders actually have lower win rates, not higher. Um, so, and I can help you with that, of course, but yes, that's why I like to show all the trades here for this year. I've already gone through all the trades for the whole 2 years, and you can see that in the webinar. It's in the videos here on YouTube, on my YouTube channel, the one from the 30th um, of June. So these are the trades as we've gone through this year, and you can see look at the amount of losing trades I have. So plenty of losing trades. So we've got the traded value. That's just the notional value in dollars. Um, Most of the trade sizes you can see are 50,000 clips. So a 50,000 clip is a half a lot. For those of you that deal in lots, that's what 50,000 is. So the traded value is just what that converts to, or what that's controlling. So 50,000. So um, lots of losing trades. Let's go through. But what you'll see is generally speaking, you'll see that my average winners are on average bigger than my losers here. Okay, so my average winners on average are bigger. Look, there's a £700 trade down there. Um, and you'll notice a lot of euro dollar trades. There will be the occasional other trades that will be in there, but a large majority of euro dollar, because I've been predominantly trading that this year. Although I have been of late trading some other markets. So in the main, though, and I think the reason I'm pointing that out is because I think it's a myth that people think they've got to be trading lots and lots of different markets. So the what I'm trying to say here is that, yeah, you don't need to. You don't need. I'm not saying you have to do it this way and just trade, predominantly a single market, but certainly I come across traders who are watching, 30 currency pairs as a watch list, and you think, wow, how can you possibly know everything that's going on about 30 different currency pairs? So I think there's a fine line, and there's a balance that you need to find within your trading and what markets you're doing. So what I'm demonstrating here is that you don't need to be trading loads of different markets either. So yeah, in the main, plenty of losers, way more losers than my winners. So who cares about how much I lose? So I'm going to answer your questions, Chilla, but obviously I'm going through this at the moment. But by all means, keep typing away. That's fine. I'll get to all your questions. So yeah, I don't care how much I lose. Or sorry, I don't care how often I lose, because I know that when my winners come in, they will generally be bigger than my losses. And not every winner is going to be £700 relative to an average loss of, let's say, 116, let's say here, or whatever. Of course not. It'd be lovely if every winner was 7 times what I lost, but on average. And it depends on obviously the time of the year, with regards to the size of the wins and the losers and everything else. But generally speaking, look, overall, if you counted up the amount of losing trades, I tend to have a lot more losing trades than I have winners. Some of these, I mean, that's basically a break-even trade there. I've obviously moved my stop to break-even. That's probably just slippage or something. I don't know. So if I just keep going, again, you'll see this whole range. There's a bigger loser there, and that was it. That is a bigger loser. What was that on? Oh, that's why. The Australian dollar, different market, and obviously, and looks like it was a single entity. Yeah, there. So that was a max loss, or getting close to a max loss. So at that point, losses would have been max loss would be about 500, I think, something like that, roughly. Oh no, I can go up to 1,000, couldn't I? Oh yeah. But I'm not always going up to 1,000, because I'm going to be starting to trail stops and, here and there a little bit. I'm certainly going to manage the risk a bit anyway. So you won't see many bigger losses. Obviously, as the count grows, then the size of the losses will be bigger. But of course, like any other trader, there's going to be a couple, 3 winners coming through there, but then straight away 3 losers. Then a couple of winners, couple of losers. Overall, way more losing trades. Look at all these losers. Look, all the way through there. 1, 2, however many. So lots of losers coming through. Lots of losers coming through, and then the occasional bigger winner, which is more gonna. that's going to pay for even a larger loser like that. It's not going to pay for all of these, but I know if I carry on doing what I do, I'm going to take you through the charts in a minute, that there's going to be a time when I'm going to get those bigger winners. And as you can see here, and this was in March, where some of my swing trades that I've been holding, you know, came in, so to speak, and hit targets or whatever. And then all of a sudden, out of just a half lot, these are good wins out of half lot position sizes. So and that obviously pays for all easily pays for all of these, and that's how the equity jumps up. Of lots and lots of losers. So why do I have so many losers? The reason that I have so many losers, sorry, I'm looking around because I'm just keeping an eye on the markets because they're all moving obviously here tonight. The reason I have so many losers is because a lot of the time I am trying to run my trades. So, and the more that you're trying to hold on to a trade and run the trade for, there's always going to be that point where you might be in an open profit, but it just doesn't keep going for you and it rolls all the way back over and stops you out. So that's why it's because I am actually a lot of my trades trying to get more out of them. And of course, some of them will really pay out when they do go all the way to the ultimate targets, but then plenty of them will only go so far, fizzle away, and then become losers. So that's the main reason why my loss rate is higher, so to speak. I lose more of the time than I win. But this is why I like doing what I'm doing here tonight, is to demonstrate, because your average retail trader is obsessed about being right, and they're obsessed about having high win rates. And what I try to impress is that it's really not important. And in fact, having high win rates is probably more dangerous for the average retail trader than not, because they're so obsessed with high win rates that they do anything to have that. And what does that mean? Usually banking their profits way too soon, possibly not even using stop losses to avoid getting stopped out. So to avoid getting stopped out, they won't use a stop and they just hope it comes back. And we get this information from brokers. Brokers obviously see it from their side of the fence. This is what's going on with a lot. Not obviously not all traders, but a big portion of percentage of their clients are doing those sorts of things. So I see it as my duty to sort of say to people, look, you don't need to worry about having high win rates. Go for maybe better risk to rewards and get used to being wrong more often than you're right. But when your winners come through, they really do compound the account, and you make more from doing that, and you're not obsessed about being right all the time. So anyway, so we're getting there anyway. I think you're getting the point. So lots and lots of losers again. Let's keep going here. Then all of a sudden, look, some nicer, chunkier winners coming through. In the main, as you see, most of the time when I'm having losers, they are lower than the relative winners that I'm having. Okay, the majority of the time, they're a lot lower than when I'm having losers. Oh, there's a few winners down the bottom there. Most of the time, that's the case. And then when I am getting some winners, again, you get some chunkier winners coming through. Not all of them are massive here, but there are some nice exits there, and one up here as well. And it's just the same thing over and over again until you get to, let's bring this up now, we're into July. So when I did that last update, that was at the end of June. And so these are some of the winners that must have come through in July. We'll talk about that. So that's early July. I'm going to go to the charts in a minute. And then I'm still getting plenty of losers through the summer. I actually had, I think I had another little drawdown during the summer. Look, plenty of losers all coming through. Um, and then, but then interspersed with a few nice chunky winners. So, I'm going to have those losers, but ultimately the winners end up coming through. I think that's the end. Yeah, that's the end, right the way up to the 28th of September. So look, yeah, some chunkier winners literally coming through. Look, over this past week or so, some chunkier winners coming through, and even some different markets, I think. in there. Oh no, that was crude oil was that was a loser, but small. So yeah, and then you get those chunky winners. So let's go through what I'm doing, then I'll come to your questions there as well. So first and foremost, as you saw, a lot of my trading is on the euro, has been on the euro dollar. Not all of it. There are other trades that I'm sitting on at the moment. Um, I am short the stock market as well. I shorted several weeks ago. So with our members, they see as I'm taking these trades and stuff. So if we take the summer, so I'd taken us up to end of June. So essentially, what happened, if I zoom this in a little bit, is from that last update that I did on the 30th of June here on YouTube, I was short during this period. So that's where you just saw those chunky winners coming in as we got into July. And then through here would have been losers because I'm not going to be making money when the market's going sideways and chopping around. And then again, we caught this period, this short period here, but that was, I'll go back in a minute. That was into August, so we caught some of that. Then I had some losers during this period. Oops, here, and then literally just in this last couple of weeks, we've been in this as well. And I kid you not, we closed out. I don't know if any of my members are here tonight, but I closed out my final euro dollar position within about 20 pips of yesterday's lows. Sometimes you get a bit lucky on your exits. That was my overall targets were in that zone, and so we were looking to exit anyway. So, but that was my final exit right down there near to yesterday's lows. So that's essentially it. I've got a view on the market, and the market's trending, and so every time it resumes its trends to the downside, then it's likely that I'm going to be getting into that because we've got tools to use to get us in as the markets start to roll over. So, and then it just comes down to risk management, and looking at risk reward profiles as well, and so and looking for good risk reward. So that's essentially what it comes down to. Um, so as it currently stands, I think these markets are obviously fascinating. Well, I'm looking at the S&P is down at 2.8% right now. So I go to the S&P, nearly 3% down on the day. The Nasdaq's down nearly 4% on the day. So there's some interesting moves that are going on in the markets right now. And then you've got the likes of the pound dollar, which is up on the day, and oh, 700 pips up, from the lows of just earlier this week. And you've got euro dollar, which is up 200 pips from yesterday's lows, also. So nearly 250 pips. So fascinating moves in the markets at the moment. The bond markets, of course, are driving a lot of this as well. So it's all spilling over into each other. So we're seeing uh, bond yields getting blown out. And as a result, generally seeing a stronger dollar. So I do think the moves in the pound today and in the euro are interesting because really they shouldn't be up in a way, in theory, when yields are actually positive on the day here. So one would normally think that normally when the stock markets are down, the dollar would be rallying. So, i.e., the euro dollar would be down, pound dollar would be down, but that's not happening. So we've got a bit of a disconnect. Now it might be down to end of quarter. We are coming into end of quarter. Obviously, last day of the quarter is tomorrow. So there could be portfolio positioning amongst the big players going on, which is creating this. it also could be come down to these yields. So if you look at 10-year US 10-year yields here, they're sitting. They are up 0.75% today. But if we go and have a look at German 10-year yields, they're up 4.25% today, and UK yields are up 5% on the day. So in a weird kind of irony, the I bring this back to the Nasdaq there. The dollar is actually on the back foot today, because there's a bit of a repricing going on in Europe with regards to where the ECB might have to be taking their interest rates, and obviously we're seeing that in the UK as well. So it could well be that interest rates here in the UK end up going higher than that of the US, and in Europe they may have to hike them more greater than was expected, and that may be why we're getting a slight repricing on the euro here at the moment as well. So whether that can be sustained or not, we'll have to see. We've got, there's always economic figures coming out. We've got inflation figures coming out tomorrow as well. So what I'm doing in my trading room with my members all of the time is we have several sessions every day, and some of those sessions are around key news of any key news event, and we have sessions around those as well. So we're totally on it with regards to which markets are the ones that we're most interested in, which ones have got developing patterns, which ones have got certain trends that we may be wanting to trade in, which ones might reverse. And it all comes down to the technical analysis. A huge amount of analysis is done. I do analysis every morning in the first thing in the first session of the day, and then throughout the day we're constantly updating that analysis, the approach that we have. But it's not just that, it's the macro environment we're keeping an eye on as well, and of course the sentiment structure as well. So there's a lot that we are doing, but essentially what I'm doing is a top-down approach. So I'm going to higher time frames, trying to get a read of the patterns, trends, support and resistance on the higher time frames, and then drilling that down to the likes of a daily chart or whatever. And some of the swing trades that we get into are taken off of an hourly chart, an hourly time frame. So they're not all off of higher stuff. So um, we entered a trade today, this morning. I entered a trade this morning, and that what was that trade based on? Oh yeah, it was a technical pattern. Again, that trade was taken, but again, it's a swing, so that was only taken this morning. But that's essentially what I'm doing. So it's not rocket science in trading. In many regards, you could flip a coin. In theory, anyway, in theory, you could flip a coin, and providing your risk to reward is good, then you could make money from the markets on a coin flip. We invest a lot of time, I do, into putting all that analysis together for our members and stuff. But and bearing in mind, I'm having to do this for my funds anyway. But again, where do I make my money? I make my money from when I get into trades. Some of those trades, not all of them, are going to end up having some really good overall risk to reward profiles. And so the rest of the time, I'm always looking for those, but lots of other trades won't actually materialize into anything. So I'm just playing the odds, and that's essential. I put all that effort into the analysis to try and be on the right side of the market, but I know that even if my entries are good, a price I might get in here and it might go up a bit, but then it may just fizzle out after a while. I'm not trying to be right all the time. I don't care if I've been in a bit of profit only to see it roll over. I put a YouTube video up just a few weeks ago saying that I had given, what was it? I can't remember what I called it. Something like that I'd um, given back 30,000 or something like that, or a trade that I'd been in had gone from being 30,000 in profit to basically back to nothing. And I put those sorts of videos up to shock people at times, because I know that a lot of traders are going to be thinking, oh, why didn't you trail your stop up? And one of the reasons that I don't is because that's all very well with the benefit of hindsight. If I'd have known, if I had a magic, a crystal ball, then, and I knew what was going to happen, then of course I would bank it. But we don't. And if I aggressively trail my stops up, then I'm never going to get £100,000 trade, because you're almost guaranteed to get stopped out at some point with a trailing stop method. So if I want to be trading for the bigger risk reward ratio trades, I've got to give my trades room to breathe, which means that I can't always move the stops up by a lot. So, but that's the game, that's the road less traveled. And I would rather trade the opposite of how most retail traders want to trade. So most retail traders want to trade with high win rates, um, preferably making money every day, every week, every month. So how I trade, because I'm not day trading a lot of the time. Funny enough, we took a day trade last Friday in the room, but I'm not doing lots of day trading. But what I'm proving to people, what I'm trying to show people, is that you don't have to day trade. We spend a lot of time in the trading room, and some of my members are day traders as well as swing traders. So, and they can use the same techniques and tools that I use, but just taking it down to lower time frames. Fantastic. But what I'm always trying to get people to do is to trade less. So even if traders are um, day trading, don't do 50 trades a day. You're just feeding your broker commissions. Don't do it. So trade less, less not more. And so whatever time frames you're trading over, and this is what I try to do with things like the challenges as well, to say, well, look, how much is enough? I didn't know I was going to get to 280% by this time in the year, but at what point um, is enough? And so most people would think, oh yeah, you would do that with day trading, but you don't. I don't. I want to prove and demonstrate that with swing trading methods and the techniques that we use, so we use like adding into our winning trades and all of that sort of stuff, then you can really build, and when those trades do come through in those clusters of profits, then those profits are so much higher than the average losers. One of our traders did a 1 to 90 risk to reward ratio trade this year. That's incredible. I've never done that. 1 to 90. Anyway, that's enough on that. Right. Do I trade, dilemma? Do I trade any crypto? I don't trade crypto. No. I have invested into crypto in the past, and I certainly will be again, in at some point in the future. Actually, yeah. So, but I don't trade it. No. I think that I would rather be trading currencies which have got so much more liquidity. And what was proven this year over the summer is when Luna crashed, that that's when traders realized that what a lack of liquidity is in some of these sorts of markets. So no, I'd rather trade much higher, um, higher liquidity markets. But yeah, the big majors, cryptos, your Bitcoins, your Ethereums, then yes, I am interested in them, but more so from an investment perspective. But if you go back over some of my interviews and stuff that I've done this year, then I've generally been bearish on the cryptos this year. Have been looking for them to come down this year, and so I haven't. That's why I've not been investing in, because I was looking for more downside. Average return in R a month. I don't know the answer to that, Lyle. I'll be perfectly honest with you. All I can do is show you, like I've just shown you, all the trades. So I don't know what my average R is in a month, but that's why I listed and just showed all the trades there, just to give you an idea of the average winners to average losers. But so yeah, I'm not interested in trading. What I do is I trade what's in front of me on the screen. So one trade might end up giving me an average of, I don't know, whatever it might be in our figure. So let's say I get a 1 to 10 risk reward ratio. Yeah, great. 1 to 10, fantastic. But then another trade might give me, 1 to 3 or 1 to 2, depending on the trade. So I'm not interested in average R, to be honest. What I'm interested in is trading the analysis, and some of those trades will be very big in our terms, but not all of them. But because obviously some of them roll over, some of them do end up getting trailing stopped out as well. But yeah, so it's an individual thing. What I'm looking for in our terms. Oh, I see. You missed it. Right. Okay. Yeah. Fair enough. Watch the recording. The recording will obviously, once we finish tonight, then it will be there, and you can go back and have a look at all that. How do you determine your trade sizes? Yeah, Chiller. This is something I haven't actually talked about. Like you saw when I went through all the trades earlier. You saw that my trade sizes were, or sorry, the losers all different. Yeah, and of course that's down to the stop loss levels, how far stops are away from price. But I do vary my position sizing. So, and your typical trader educators will say, "Oh, only risk 1% per trade." And actually, I will. I will. I'd recommend that to a lot of traders, having a fixed percentage at risk. I do recommend that. However, there are times when I will. My job as a trader is to assess the market conditions and the setups that I'm trading. So I'm not on the challenge account always going to be risking 2% because my remit on the challenge is to be able to risk up to 2% on a trade. But a lot of the trades I'm risking 1% on or even half a percent on. I put a trade on this morning. The trade that I placed this morning was risking a quarter of 1%. So it does vary depending on the market conditions and stuff. So, but would I recommend doing that to a a younger trader, so to speak, someone who's only been trading a shorter period of time? No, I'd say that yeah, stick to a fixed percentage of your account balance per trade, because otherwise you'll get it wrong, and if you vary your risk around, there's always going to be that risk that you put a higher risk on a trade that becomes a loser, and you put a smaller position size on one that becomes a winner. That does happen to me as well, but in the main, over the long term, I found that to work for me. There's lots of questions coming through. If I've missed anyone, I will scroll up to make sure I'm not missing any. So how do you determine your trade sizes? Coming to that is, yeah. So I get a risk calculator out, Chiller, and I calculate. Okay, how much is 1% at risk? Do you want to see the risk calculator? I can quickly show you. So if I bring up, there it is. So it's a MyFX book, risk calculator. It defaults to euro dollar. Change the account currency. Obviously, I'm here in the UK, so let's put an account size in. So I'll put, let's say, 10,200 as an account size. Put in how much you want to risk, 1%, whatever the stop loss is going to be on the chart. So let's say the stop loss is 127 pips. Hit calculate, and then it tells me, right, on this account, I'm risking £100. So therefore 1% of 10,200. And it's telling me with this trade on the euro dollar with 127 pip, I need to put 0.09 lots on. So that's what I do. Do you see what I mean? Does that help you there, Chilla? I think that's what you were getting at. Use a calculator. Yeah. That's what I do. Do it all the time when I'm in the trading room with my members. If I'm taking a trade at that point when I'm live on the mic, then I get the chat calculator out and I work it out at that point. Okay. Hi, Michael. Are you expecting the bear market on indices to continue at least into next year? Michael always wants the big picture. um, so Michael knows I've been short because I know Michael. So um, I'm always open to whatever the market wants to do. So, but what I mean by that is I've been short on the market for the last, I don't know, for a while now, since August. Not that long, but I think about August time I started shorting. So if I go to um, the Nasdaq, yeah, back in August, I was shorting. So I was looking for a summer rally, as Michael knows. We were talking about this ages ago. So back in June, I was looking for a summer rally. Not that I was trying to trade that necessarily, but I just was looking for the stock markets to rally during the summer, um, and then for them to roll over as we started to get into the autumn. So we peaked, in middle of August, and then we started to roll over. So the in answer to your question there, Michael, is my concern for the stock markets is, look, I'm positioned now. So I really, in the grand scheme of things, it doesn't matter if the stock markets do decide to turn around and go way back up. You're asking my view though. My view, and I can be wrong, and I have to make this very clear because I don't want people going off and just going and doing crazy things and just trying to trade. Um, my view is that what with inflation being where it's at, that that's squeezing companies' profit margins, and obviously it's also squeezing the costs of living are affecting people. It's not just here in the UK or Europe; it's in the US as well. So it's like a triple whammy, really. So you've got corporations um, are having the profit margin squeeze, but then also your average man in the street is finding that the costs of things has risen, and so he doesn't have as much, he or she or they don't have as much money to spend. So these things always end up sorting themselves out. So I'm not like a perma bear, but I do think at least for the nearish term over the next few months, then yes, I think the scope is there to go down. But before you go off and anyone goes off and tries to short the market, I think the stock markets could bounce and put in a rally any time as well. We're into a double bottom at the moment. Look at my daily chart here. It'll look a lot clearer if I come to a weekly chart. This is the Nasdaq. It's into the weekly 200 moving average, same as the S&P. They're both into these 200 period moving averages. They could so easily bounce in the coming weeks from here. So I think you have to be wary of that. But yeah, the lot in the sort of medium term, I am still bearish overall, Michael. But but we'll see. As I've been trading for 20 odd years now, and I've now seen it firsthand. You know, time and time again that just when you think, oh, this is going to be a big bear market or whatever, the ingenuity of central bankers and governments to come up with plasters to try and fix the problem is there. Whether you agree with it, and the perma bears will disagree. Oh, they're doing this just to try and save the market. Yes, they are. And don't fight them too much. But at the moment, we do have this recipe of all of this stuff going on. And we've got central bankers who are deliberately trying to bring inflation down by hiking interest rates. So they are trying to send us into recession, which is what's looking very likely. How deep the recession, we don't know. But but do remember the stock markets are forward pricing mechanisms. So the by the time we get into recessions, a lot of time The stock market's bottom long before we technically come out of recessions. Just bear that in mind. Not our experienced traders here tonight, but certainly anyone who's less experienced. Don't think, oh, right, well, we're going to go into recession, so the stock markets are going to carry on going down. A lot of the time, not long after you officially get into recession, the stock markets actually start that they've put in a bottom. So, but yeah, I do think a little bit more downside here. What percentage of return would you say is derived fundamental analysis versus technicals? Lobo, hi Lobo. Um, all of my trades are based on the technicals, Lobo. The fundamentals are supportive, maybe. I think it's important to be aware of what's going on. The drivers, especially when trading currencies, the drivers between, let's say the USA and Europe, and looking at the economies of both, and then saying, well, which one's stronger and which one's weaker. So I think that's important, but I don't make a trading decision based on fundamentals. All of my trading decisions are based on the technicals of price. The fundamentals are the supporting evidence to my case, so to speak. I have a problem deciding good stop loss levels on swings trades. Any advice? Um, the problem with that sort of question, I appreciate your question, but I haven't got a clue what sort of trading you're doing, what makes you go in and where you're going in. So, but my general advice would be, so let's just take an example, some examples on here. So let's say, oh, I'm trying to think of an example now. But generally speaking, depending on where you go in, I would always place my stop losses. Let's say I was, for argument's sake, and it'd be very, very unlikely that I would short here today. Why would I short into a double bottom? I wouldn't. So, but let's just say, for argument's sake, that I was, and I was looking for it to just shoot straight down. So because it's such a big down bar here, then yes, I would just put a stop above the most recent high. So, and likewise, if I'm on the long side, then a lot of the time I'll put stops below the most recent low. And you get trading educators say, oh, don't do that sort of thing. It doesn't matter. The market makers are coming for your stops. What a nonsense. They are, in that if the market wants to roll over, then it's going to roll over. But otherwise, if you've got in, somewhere over here, let's say, or you've got in over here and you've placed your stop down here, well, it's fine, isn't it? So don't listen to that sort of nonsense that's out there. These prior highs, prior lows are there for a reason. Yes, markets eventually, as they start coming down towards a prior low, they're going to want to take that out because there will be orders down there. But it's not, we don't need to worry about that because we know that we're only going to be right a certain percentage of the time. So let's not worry about it. Try and stop avoiding being wrong. Just accept that if you got in over here, if you use this as an example. So if we did get in over here, well, what are you going to do? Go and put your stop right down here somewhere. Well, that's just craziness. Just accept that if price did roll over and nick stop you out and go back up again, you can always get back in again if it carries on back up. So the market is not coming for your stop loss individually because you're not big enough and I'm not big enough for the market to really want to do that. So in the main, yeah, prior highs, prior lows. I will put stops below moving averages at times as well. If there's not a prior low close enough, then I will use a moving average. But I can't really answer your question much more than that because obviously I don't know your style. But I hope it's given you some thought. Do you think withdrawing money is beneficial for psychology and performance, or do you think it's just best to compound until the account is large? Um, I think in the main, if you're trying to grow your account, you don't want to be drawing money away. So in the main, if you're trying to grow your account, what's the point in doing that? However, um, if you've had a profitable period and you've had a good run, then withdrawing a small amount to go and take your husband out for dinner or your wife or whatever, to give yourself just a very, very small treat, or it might just be just withdrawing, £20 and going and buying a bottle of wine. There's a subconscious level. It's a reward. You're giving yourself a reward for because of the efforts that you've put in. So yeah, you could do that, but you don't want to be taking out too much if you're trying to grow your account, because otherwise it's just going to take longer. So if you have such a if you have a such a volatile day with huge swings, how can you make trades and what indicators to use? Yeah, I'm pleased you've brought that up, um, because my first answer is you don't have to trade. When the markets get really volatile with really big swings, like we've seen in the pound, I've been trading 20 odd years. I've not been trading this pound dollar, just so that you understand. And yet, how many retail traders out there are all trading the pound dollar because it's got all this volatility? And how many of them are all getting crucified? There's a reason, you know, for it. So I've not actually been trading the pound dollar because it has been too volatile. The ranges have got really big. So I'm not interested in particularly in trading it. There are other markets which have like euro dollar and others, New Zealand dollar, Aussie dollar, where the ranges are still big, but not as big as the pound. So I think the pound has been very difficult to trade. You're absolutely right, because with these huge ranges that we're seeing on the pound, it does make it difficult to trade them from a risk to reward perspective, basically, because you've got to put a stop loss somewhere, and your stop's probably going to have to be quite a long distance away from where you've got in. And then you've got to then say, well, if my stop's right down here and I've got in here, I've got to have a target right up here. Maybe it won't work. So yeah, sometimes we have to acknowledge that we don't have to trade. We don't have to trade. And yet, what people think, people want to chase the volatility. It's one of the worst things they can do. I said it on social media earlier this week. You made your money in the pound dollar if you'd have shorted it 2 weeks ago. Trying to make money in the pound dollar now is really difficult. Obviously, there's experienced traders who will be intraday trading and they know what they're doing. But for a lot of people, they don't have any right to go anywhere near the pound dollar right now, or any pound pair. So, because the ranges are too big. So that would be my advice. Go and trade euro dollar. Go and trade one of the other currencies. If you're trading currencies, you don't have to trade these huge the markets which have got the bigger ranges. Paul, which platform and broker do you use and why? I've got a few questions here. What does a veteran like yourself think of forex spread bet brokers, i.e., IG? Are they a gimmick? Thanks. Yeah. Right. I use a number of different brokers, Paul, in answer to your question. So I use, for the challenge, I use Saxo Bank, purely just because I've had accounts at Saxo Bank since about 2010. The problem for most people with Saxo Bank is their charges are quite high unless you've got a much larger accounts. So for smaller accounts, I'm talking about £50,000 and below, then you're better off with other brokers, just because from a charging perspective. So there are loads of good brokers out there, but you've asked me, so I'm just going to give you two. One would be Pepperstone, and the other one markets.com. So those are two, but there's loads and loads of brokers, but those are two brokers that I do personally use as well. So there you go. What do I think of forex spread bet brokers? I think that you can spread bet through brokers. Pepperstone offer spread betting actually, and they're good. Pepperstone got good. We got a lot of our members use Pepperstone, and they're good for that. Um, I think markets.com do as well, but a lot of the forex, the genuine sort of, I say genuine, the lot of these forex, as you say, or spread bet brokers, I'm not a fan of, because their charges tend to be higher. They tend to have a vested interest um, in their customers not doing as well all of the time. So they will clip you here and there. So they will overcharge, or say overcharge you, but they'll, you'll get a bit more slippage when you get stopped out, and your feels won't be quite as good, and you won't even realize a lot of the time. So yeah, that's the problem with a lot of those ones. It's just that their costs add up as you go through the year, because they're just getting that extra pip out of you here and there, and it all adds up by the time you get to the end of the year. Oh, thanks, Lyle. Yeah, Lyle said, well said, Charlie, about the smart money institutional rubbish. Yeah, exactly. Yeah, it's just there's a lot of that sort of nonsense going on out there. It's been going on for years. I've been seeing this for 20 years. People saying, the market makers are out to get you. Well, in a way, they are. But don't worry about it. It doesn't matter. But of course, you've got these people out there. They're preying on traders' fears, so they know what they're doing. They prey on your fears of winners and losers and all of that, and conspiracies and stuff. The market's job is to fulfill orders. So if there are lots of orders in an area, the market may well go gravitate towards that level, because there's lots of orders to fulfill up there. If there's enough inertia pushing it up, price up. So that's just the market doing its job. It's not a conspiracy necessarily. Now and again, in very light traded markets, you can see um, some whipsaws in price, but again, it's not. Don't worry about it. It's just get on with your trading. Don't worry about being right so much. And if you have less, if more traders concern themselves less with being right all of the time, they wouldn't worry about it. And if you did get stopped out or nicked out of a stop loss, and the market's come down a bit, but then in relatively short period of time, it's turned back up and it's going back up in your direction, well, I'm sure you'll be able to find another way to get back in. How do you deal with the spread hour, close and reopen? Remove stop or do nothing? Oh, okay. How do you deal with the spread hour, close and reopen? I don't. I'm not entirely sure what you mean. Do you mean at the end of the day when the spreads widen out? Is that what you mean, Lyle? I think that's what Lyle means. So um, at the end of the day, then spreads will widen out, and you'll see spreads widen out over weekends as well. No, no, no. You don't come out of trades. You don't close positions and reopen. You close positions and reopen. What are you doing? You're giving your broker more money again, because you're generating more commission for them every time you do that. No, I never do that, ever, ever. And yes, I hold positions over weekends in the main. Um, because I do lots of swing trading. And I say in the main, recently, because of the stock markets, I have been in. I've been on the short side of the Nasdaq for this past several weeks. Um, but again, it's going into some of these Fridays. I think I said it to my members on last Friday. Look, if anyone, for whatever reason, is long of the stock markets, you're going into a weekend in a highly charged market, and if you were, for whatever reason, long, then I wouldn't hold a position if I was doing that. So maybe you've got long intraday, and I would cut something like that. But most of the time in trades, I don't come out, and I don't. The fact that spreads widen out a little bit at the end of the night is not really an issue. If you've got now I was just about to say what you've just said here. Sometimes spread hour I don't even know what spread hour means. I've never heard of that. That's obviously something you've called it. So I think you mean at the end of the day, yes, when spreads widen out. Um, and you're saying it picks off your stop. Is this normal? Do you think my broker is B book? 100% your broker is getting you there. The market spreads will widen out. They will anyway. But if you're finding that's happening, then it's likely your broker um, is you know adding a little bit of extra spread on or whatever, and they're just getting easy pickings for you. So, yeah, I would say that's more of a broker issue than anything else. Thanks for your answers, Paul. Yes, you've heard of Pepperstone. Well, they're an Australian broker, Paul, but they've got offices in London. So if you're here, I don't know where you're based, Paul, but yeah, if you're here in the UK, you deal with the London office, not with Australia. I found enough. I met one of my account manager yesterday because they're might be setting up doing some fun stuff for me, and so met up with him yesterday afternoon. Um, so yeah, and likewise with markets.com, they're based in London as well. Have you ever tried any of these online prop firm challenges? Yeah, good question. And what do you think of them? One, no disrespect to him, but why would I? I don't want to come across as arrogant, but why would I? I trade enough money to not want to need to do that. Um, some of the better or widely known, and I do this prop firms because I don't really think they are. They're great businesses. That's what they are. And because they charge people, a certain amount to enter a challenge, and if you pass the challenge, then you get to trade some money, a given amount of money. But even once you pass the challenge, there's still quite stringent criteria to for you to carry on trading said money. So in the main, they are great businesses. They are great business models for those business owners. Without me saying too much else, Ian, I think you can read between the line. Um, there's no such thing as a free lunch. There's no such thing as So those ones, no. I in the main, 90% of people are just basically giving them money for the promise of being able to trade a pot of money, which is not really real. Your best bet, the best advice I can give you is to just get good at trading yourself. Trade your own money. If you want to manage money yourself, like properly manage money, like I do, fine. And you want to become a money manager, that's different further down the line. But build a track record around your style, not with some companies putting all of these stringent rules on, which make it almost impossible in the long run to make money. So do it that way and uh, build your account up over time. Uh, if Sorry, this question's coming through. If someone asked us already, but any input about the Bank of England intervening this week, I've never seen this before. Yeah, hi John. Yeah, let me just put this over onto um, the pound dollar here. Um, well, the funny thing is that we were just getting into uh, this period of quantitative tightening, haven't we? And so where the central banks are taking money off the table, so to speak. And then what the Bank of England have had to have done is intervene this week in the markets, as you heard. So, and it actually wasn't a lot of money that they put out there, and so it did relieve the pressure. Apparently, there was talk of some pension funds getting a bit into trouble, or I say trouble, but getting a bit tight, and so they needed to free up the bond market a little bit there. So I think it's a good thing. I think they have to. They have to be supportive of the financial markets, and we do need you know, an orderly financial markets. But it was getting very disorderly, and we don't know what's going to happen next. But I think they did need to do it. I think it was the right thing to do, to try and just settle the markets down. And as you can see, it has actually worked thus far. So we saw the Japanese central bank intervened last week in with the yen, and they were started buying some yen. So they've got a lot of currency reserves. The UK doesn't, so they could afford, with all of their huge amount of currency reserves, to buy some yen and just give it and settle it a bit. So if I go to the dollar yen, this is what happened there. So it just settled it. But as you can see, they stepped in. So this is the dollar against the yen. So the dollar depreciated against the yen on that day. But as you can see, it's not actually done much since. So I suspect they're going to need to intervene again at some point. So what we're probably about to go through, what I think we're going to go through, if this volatility stays the way it has been, I think that now it's settled down. As you can see, the dollar yen has settled down since then. It's not broken the ranges of this, but I think we're going to end up seeing more intervention from central banks going forward. We've seen it in China. I think it was today, and so earlier today. So I think that may be a bit of a trend. If needs be, then I think they will coordinate action. Do remember as well that the dollar, as strong as it is, it's highly overvalued right now on the international markets against G7 nations as well as emerging markets. And I'm not trying to call a top in the dollar. I'm just saying that if it carried on going higher, that you could end up seeing the US get involved as well in coordinated action, and that would be the best thing that they could do, where you're getting the Federal Reserve, the ECB, and others getting together and doing coordinated action to bring down that volatility in the markets. And at the moment, you've got a very overvalued dollar, and it does make things makes it much more difficult for people to export into the US. And so, because for that reason, or sorry, the other way around. um, it makes US exports more expensive. So it does hurt the US as well to some degree. So it wouldn't surprise me if something like that happens. Anyway, it's a long rambling answer there, John, but I think it's a good thing. Anyway, coming back to your question there. Hi, Safe. I You won't remember, but I once said to you, I'm going to start trading with 1,010 pound a point. What I thought I was, instead put 550 in and use £5 a point and lost 500, and now I've got 50 left. Oh, and I trade very small risk, very small, and I'm just learning. I'm 17, so hopefully it pays off in the future. Well, thank you for your honesty there, Safe. And um, yeah, you've learned a valuable lesson there, and respect your risk. It doesn't matter whether it's £5 a point or whatever it is. Keep your risk down, because £5 a point doesn't mean anything to me. It's You've got to use a position size calculator and risk a maximum of 1% of your account balance on any one individual trade. Um, that's the best advice I can give you. Risk a maximum of 1% on any individual trade. Use a position size calculator to make sure that on your 500, oh, you've got £50 left, right? So, but if you had have been trading 500, your your risk per trade would have only been 500. Sorry, £5. That would have been the maximum, being 1% of 500. That would have been your maximum loss on any one trade. But basically, what happened was you have massively over leveraged and not realized what you're doing. So appreciate you're new to it, but that's what you've done. You've massively over leveraged. And Anyway, going forwards, I'm sure you've learned from that, and that's the advice. Bankrupt Britain is here. Hi, Robert. um, yeah, I mean, these are other discussions, aren't they? I'm a true believer, as I've like I said, I remember saying all this back in the financial crisis to people on webinars and such likes then, that never underestimate the ingenuity of mankind. And we can look at all the negatives that are there, and there's plenty of negatives, and it's not just UK based, as you know, Robert. It's all over the place. But um but I'm always a firm believer that over the long run we will solve problems that we have today. So I think that technology is growing at such a rapid pace that and green tech is growing at a highly rapid tech pace as well. Probably not rapid enough as far as energy is concerned right now, but we will solve those problems and we will come out the other side. So that's how I tend to look at these things. I don't, I think that we will solve problems. Now, of course, if you've got people at the helm who are making poor decisions, then that doesn't help. But again, we'll have to see. We'll find out in about 6 months' time whether the Conservative government, who are in power at the moment, have made a massively bad, poor decision, or whether we don't know what's going to happen in the markets as yet and in the economies, and whether what they're doing does stimulate, like they think it's going to. So we won't know for certain until we're 6 months into the future. But whatever happens with the political parties here in the UK, that's they're just they have a small part to play in the grand jigsaw that we're all involved in. And so in the bigger picture, I'm an optimist, and that's not just about the UK, it's globally. I'm more of an optimist. But of course, we always are going to have recessions are inevitable, bear markets are inevitable. But if you study your history of the stock markets and of economies, we know that we've always had recessions and we've always come out the other side of them. They're never nice when we're in the middle of them, but it's part of that ebb and flow of everything. So yeah, thanks, John. Safe. The first day was brilliant. Made £75. Yeah, that's no good. Yeah, yeah. You way over leverage, Safe. So crazy, 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 crazy. So um, yeah, yeah. I'm sorry that it's happened, but yeah, you've just got to move away from that type of thought process. You've got to risk a maximum of 1% per trade as a maximum. Eurodollar hits if Eurodollar hits that upper trend line, are you going to short again? Or was that? Oh, okay. Um, think we might be starting to see a slight turn here. It's 8:15, and the stock market is trying to bounce here at the moment in this final hour of the US cash session. So it'd be interesting to see if that can hold on to that, because it's been down all day. Um, the euro dollar, the trend line, yeah, was that what you were talking about? Euro dollar. If the euro dollar hits the upper trend line, will I short? Um, No, I don't think so. I mean, things can change, and I have to react to price action and whatever else is going on, of course. So I can't completely predict. But um, if the euro dollar, let's see, it's continued to have a good run while I've been talking here tonight. If it comes up to that trend line, I wouldn't blame you for shorting it, but I'm not going to give you advice on what I'm doing. That's what I do with my members, as I always say. So but what I can say is I do have a plan with our members. So I have a multitude of plans with regards to the euro dollar. Sorry, you're not going to get specific trade advice from me, because that is for our members. A lot of regulated brokers ask for proof of address. Yes, like a phone bill for KYC. You don't pay your bills as I'm 18 and live with my parents still. Do you think I'm still able to get an account? Yeah, if you're over 18, you can open an account. I'm trying to think though. Yeah, you need a bit. You need something. You can use. Usually, you can use something like a credit card statement or a bank account statement, Lyle. As long as it's got your, that will have your address on it. Usually, they'll have that. Um, so yeah, usually just your bank statement would do it. You don't have to have a phone bill or anything like that. What's the biggest position size you've ever traded? Are there big firms out there trading £10,000 a point? Um, Safe. You've got to get over this whole big position stuff. Forget it. You don't need to do that. The biggest positions, probably off the top of my head, about £900 a point. Biggest positions I've traded. So around that sort of level, if you're talking in spread bet terms. But yeah, forget that. It's all relative to the size of accounts that you're trading. Stick to the risk management rules, and that will tell you how much to risk to trade. I know that's not what you're asking, but it just says to me, what are you? Where's your focus? Your focus is on the money. Forget that. Focus on being a good trader. The process of being a good trader. The money will come in the future, but you need to focus on being a good trader, managing your risk. And if you prove it on small accounts, so gradually your small accounts will grow. You can add to the account as well, and all of that. So yeah. Um, okay. I think I've caught up with questions. By all means, if there's any more questions, carry on. Um, Gotta chill. Yeah. Oh, right. So trying to do. um, yeah, gotta chill a bit. Yeah. The number one reason why traders fail is one, because they're not well educated in trading, and so therefore make mistakes. Unfortunately, like safe, you're learning, but you've learned the unfortunately the wrong way, in that your education has been quite costly there. So but in the main, the number one reason that traders blow up is because of risk management. It's poor risk management. That's really why. So yeah. Um, Safe. I'll be honest with you. I wouldn't. You said you won't risk more than 2%. Seriously, don't risk more than 1%. I've been trading 24 years. I've earned the right to be able to, on the trading challenge that I've shown here tonight, to risk up to 2%. And a lot of the trades I'm trading at 1%, like I said earlier on, or less. You haven't earned the right yet. Earn the right to do that. So, and you're not there, and you won't be there for a few years. Seriously, you need to be trading up to 1% and do that certainly for the next year or two. Then you might have earned the right to go up to 2%. But otherwise, you haven't earned the right to do that. And all that's going to happen is it's going to accelerate your next decline. And I'll be honest with you, because I see this time and time again. Don't do it. Otherwise, I'll see you in a year and you'll tell me what happened. And honestly, it's anyway. I've just met you've got to bear in mind I've met thousands of traders over the years. Plus, I have relationships with brokers. They tell me what goes on all of the time. My asset managers get to see loads of client accounts. They tell me what goes on all of the time. So I just see it either directly or indirectly year and year and year. And it's frustrating for me because of greed. People naturally want to try and make as much money as quickly as possible. And it's my fault in a way, because I go and do a trading challenge with some big numbers on it. And then people are like, I want that. Well, yeah, great. I want to inspire people, but I want to inspire them to do these things in the right way. My longest losing streak was, and I remember this well because it wasn't actually that long ago. It was late 2018 into the spring of 2019. So it was a good solid, I think about 7 months. Um, so yeah, it wasn't in, and it was my longest, and I'd been trading all those years. So I'd been trading like 20 years at that point. What was it? What did I say? 2018. Yeah, and and then I've gone and had my longest losing streak. Just goes to show you, it doesn't matter how experienced you are, it can happen. If you manage a risk, then it's okay. But if you don't, and while I was in that losing streak, I was doing a trading challenge which had high risk, so that lost. So yeah. But anyway, that was my longest losing streak. Do you use a trade copier with all of your accounts, or are they used for different strategies on each? Um, it's not necessarily in different strategies on each. What I'm tend to be doing is I'm um, so I lost my way then because I was looking at the charts. What I tend to be doing is different levels of risk based on the different accounts. It's not necessarily different strategies. It's a lot of the time I've got my main accounts which have use low leverage. My two main funds use low leverage, but then I have the challenge account here, which I'm more highly geared, even though a lot of the time I'm still only risking, like I said, 1% per trade or up to 2%. So that's the thing. I'm a lot of the time I'm in the same trades. The funds might have slightly wider stops because I have a different overall approach. They're a lot slower. I'm just letting them run for longer. So I'm I'm a lot of time I'm in the same sort of euro dollar position, but slight with some slight tweaks to it depending on the accounts, Ian. So hopefully that answers your question. So it's not so much different strategies per se. It's more just about the different what my overall goals are. You see, so. Dilemma. Thanks, John. You earn the right. You like that. Yeah, yeah. It's good. It's a good line to remember. You had a great video back in April with a back-tested strategy. I'm trying to remember if it was an automated trading system or something you use simply to test your strategies. I can't remember, Dilemma. Unless you, I can't remember. I can't remember what I did last week, let alone in April. You'll have to find it, and then against my next YouTube video, put a question up and tell me what one it was, and I'll get back to you on YouTube. Uh, but it was yeah. So I don't know. We do have automated trading software that I do have, but predominantly my trading personal trading is manual trading. Oh, that's good to hear, Safe. Good to hear. That's what I want to see. Yep. Um, Hi, Atard. You'd be careful shorting euro dollar or cable now. Attention turning to potentially some dollar weakness may mean more downside. Yeah. Well, normally, McLaren, normally when you see the stock markets coming down, normally the dollar is appreciating. So therefore, the euro dollar would be coming down as well. In the main, they're quite correlated like that. So normally, if the stock markets are going down, euro dollar's going down. If the stock markets are going up, then well, the euro dollar might still be going down, but it's got more chance of going up as well. So um, if the euro dollar or cable, as you're saying, could continue to bounce here, you're right. Therefore, that's dollar weakness. Um, it it doesn't necessarily mean downside for equities because normally, if they're going up, it's because equities are going up as well. But that I have found that quite interesting today because this is a bit different here. What's happened today? That we've got stocks down, whether it's the S&P or whether it's here on the Nasdaq. Um, but then you've got those currencies up. So it's not normally like that, not by such a big differential there today. But yeah, I think that I think that with all this volatility in the currencies, I think it's again, if you're putting a trade on, you've got a stop loss, you've got some risk management, it's okay. You've got a trade idea, but um, but yeah, I mean, looking at those currencies, they've had some monster days. If I go back to the pound as well and the euro, um, they have had some monster days. But I think if they're going to continue, they will need to see a bounce in equities. So if I would have thought so. Normally that would be the case. Time will tell. If I come back and say I've broke the 1% rule, do me a favor and drop kick me. Oh, no problem. I will help. uh, Still so many questions here. I'm trying to work my way through. Do you know of any firms in London that actually employ uh, or back profitable traders? No, I don't. They're very few. If there must be some, but they're very private. I think the ones that do exist, and because there are some that exist, but they won't employ that sort of things. Long since gone. But there's not many. I wouldn't know. As I keep saying, trade yourself, trade your own money rather than in the main, because you go to one of those, even if you found a firm like that, then a lot of the time they're going to be quite stringent with how you go about trading, and so it might suffocate your trading style. So I just don't. There's not many genuine prop firms out there anymore. Not like, in offices and all of that is what you're meaning. Do you use any fundamental analysis or are you pure technicals? No, John, as I was saying earlier on today, this evening, that I use technicals, fundamentals, and sentiment. So in order to execute a trade, then I tend to use technicals for the execution, but fundamentals, they add supporting evidence, so to speak, to my trade. So I am constantly keeping an eye on the fundamental developments of what's going on. So I am watching what central bankers are saying, what the general themes are between different central banks and their policy, and what's going on with inflation figures in different economies and all that stuff. So that is important to have, but in the main, I don't take a trade based on a fundamental. I take a trade based on the analysis on the charts. There's no such education nowadays. Why most traders still fails? There's so much education nowadays. Why do most traders still fail? Yeah, great question there. Considering the amount of information that is available, why do most traders still fail? The reason they fail fair and square is because of mindset. It's not because of strategy per se. It's because of mindset. So, which is why a lot of my videos on YouTube here are mindset related videos. And because I know that I sort of hinted earlier on, you could flip a coin and find a way to make money trading the markets just by flipping a coin. But if you haven't got the right mindset to be able to deal with trading the markets, you're still going to lose. So, what do I mean by that? You imagine you go and a simple example of mindset could be that you've got a great strategy. Strategy works, and the first trade you have is a winner. The second one's a winner. Then you have, let's say three losers in a row, and then the next trade that comes along, you hesitate because you've just had three losers in a row. You hesitate and you miss out on what would have been a big winner. And that's what I mean. And this is a very crude example, but this is how mindset can get in the way. Or you go and have a number of losers, and then you start making adjustments, and you start, banking your profits that much sooner after you've had a number of losing trades, just because you want to feel better. Or you choke your trades, you move your stops too aggressively because you want to feel good, you want to get your stops to break even, all that sort of stuff. There's so many things. It's all mindset, really. Um, and unfortunately, an, a lot of education is centered around the technicals, when really it's trader mindset, which is much more important in delivering returns over the long term. Can anyone become a millionaire with trading? With Yeah, of course. And so I mean, obviously, if you start off with a very small account, then it could take many, many, many years to do that. If you start off with, let's say, £500 an account, it's a tall order. But you might start off with £500 an account, and as the years go by, as you get better at trading, you add to the account as well, because you've got a job that you've got savings from, and you're building your account over time. So yes, anyone can do it. Do you have any publicly available of your funds? Yeah, you just need to go to Pelican Asset Management and then just ask them about my funds, and they can give you all your they have all the information on the funds. Paul, yes, you are in the UK, right? Thanks for the clarification. Right, okay. You've been IQ option, but since Brexit, existing accounts had 3 to 5 year exit limit. Right, okay. Um, Extension limit. I don't know what that is, but okay. Yep. Uh, Carl, oh, I see. Right. Yeah. So you'd pulled your Dow shorts out because of a jobless claims. It would have got to your 6R target. Right. Yeah. So you second guessed what you were doing. Yeah. Yeah. Uh, is it true that you don't day trade anymore? Yes. Also, do you trade indices like the FTSE 100? Yeah, I don't tend to day trade anymore, and I've said this many many times on the YouTube channel as well. But like I said earlier on, I took a day trade with our traders in the trading room just last Friday. So occasionally, I will day trade, but as the years go by, I'm getting older, as you can probably see on the camera there, and also when you're day trading, it's quite intense and you need to be there, in front of your screens, with all your information, and you can't afford to miss setups. So it's quite restrictive on your time, whereas swing trading is less so. So you still got to do all the analysis and all of that, but if I pop out for 2 hours, it's not going to make any difference to my trading. Yeah. So gradually, as the years have gone by, I just was doing more and more swing trading because, one, you make more money from swing trading. The gains are so much bigger. Don't let me put you off of day trading, but the gains are that much bigger from swing trading, because you get into these trades that can become very very big. The benefit to day trading is that you can have more regular gains because you're trading, a few times a day or whatever. So there are benefits to that, but don't underestimate the power of the dark side. Far more people lose at day trading than those that swing trade. Um, I don't day trade because of lifestyle. I haven't. I was younger, and when I used to do all that, and as you get older, you like, I don't want to sit here staring at screens all the time. And I used to get to the end of the day, my eyeballs would ache from staring at screens so much. And like I said, you couldn't even go out for 2 hours without thinking if you've missed a trade setup or whatever. So for me now, and in recent certainly over recent years, I have no interest in sitting there and day trading. And really, if I want to day trade in the main, I've got to keep my tools sharp, and I'm not keeping them sharp anymore because that's not how I'm trading. So now and again, if there's a really nice setup and it's it all comes together a bit like last Friday, then fine. But that's really quite a rarity. I'm quite happy. I don't need to be day trading as well. I can make enough money from swing trading without having to day trade. And that means that I don't have to be glued in front of my screens. Hopefully that answers your question there. Do you know any? Oh, I've already been asked that. No, I don't know any Alex, any real prop firms. No, I don't. You're better off trading your own money. If you're a good trader, you can trade your own money, and you'll make more than enough money. If you know doing it yourself, so you don't need to have be trying to be trade someone else's money in that regard. Um, I still trade my accounts. I don't need to be doing prop. And it sounds to me like you probably don't need to either. I have funds. One of the reasons why I have funds is because, well, one, I was invited, I was asked to set up a fund, by some investors, and I thought, yeah, it'd be quite a cool thing. It was a massage of the ego. And it also adds to credibility with what I do, with everything that I do, to have regulated funds. Then I think it adds to that whole credibility as well, which is important to me because I can't be bothered to write a book. That's the bottom line. I've been asked to write book before, but for Harriman House. But I started writing. I think I got about 10 pages in. I thought, I can't do this. I can't sit down and write a book. But that would be the sort of thing that a lot of people that write books in our industry write books for, yeah, because they want to get their ideas down. But it also adds to their credibility and everything. It's always written a book, sort of thing. But I just can't do it. So you know, set up some funds instead. Chiller, you're going to lose. I'm sorry. I'm not even going to wish you luck because you're just going to lose. I'm really sorry. And that's really negative of me to say that, but I just saying that. Oh, maybe Chiller's gone because it looks like he said goodbye. But it's these challenges are just you're just feeding the beast. You're just giving these companies money. Safe. That's what I'm just talking about. Terror. No, no, no. You're just giving them money. They've got a great business model. Great for them. But you're just giving them money, and that's all you're doing. Forget it. Focus on doing your own trading on your own accounts and grow it over time. Everyone wants money now. Give me prop. Go to one of these prop things online. You're just going to be paying them money, and you won't survive it because they're geared to you not to survive. Do you really think that they've got all this money that they want to give to people that they don't even know? They're quite happy collecting all their fees and stuff. What do you offer for your members? Kamal, if you go to my website, I'm being lazy here, but if you go to my website, charlieburtontrading.com, click on the memberships, click on gold membership because this is our most popular, and then you can scroll through all of that, and that tells you what have we got. Live trading room sessions. All my trading room sessions every day are recorded, so you don't have to be there live, so you can use all of that for education. So it's basically online education. Any trades that I take, I send out, so it doesn't matter if you're at work or whatever. I have my own app, phone app, and so people get real-time alerts from that app. You also get to, if you want to, have my challenge account copy trade to an account of your own. What else? And then we've got all the course material as well, the foundation course and the masterclass course as well. So there's a huge amount that you get learning all my techniques and all the strategies that I use. I forgot to mention, I should have mentioned this earlier on, but and at the moment there is a deal, I think. Let's have a look. If I click on become a member, uh, yeah, there's a promo up until tomorrow. There's a 25% off your first month. So it's £97 a month, but you get 25% off. Why not give it a try? You might find, oh, this is the best thing since sliced bread. So why not give it a try? You can always cancel at any time. So anyway, to go over to there, there's a load of information on that on the website there, and that would be my best way to answer your question there. Uh, oh, okay. Thanks, Xavier. When did you realize being a trader was actually feasible for you, that you could do it? That's a really good question, Bonk. Have I? No, still trying to catch up on all these questions. I'm getting there. I did have an aha moment, a light bulb moment, Bonk, a couple of years or so into trading. And don't get me wrong, you're always learning. I'm still learning to this day. There's always little things. And I don't mean I'm learning as in learning what, a Bollinger Band is or whatever. What I mean is you're always a student of the market. We're always learning, and dealing with different things that are going on in the market. So you never stop learning in that regard. But certainly there's been light bulb moments along the way, and one of mine um, was when it came to risk. Basically, I used to get overconfident after I had a good run, and then I would then start, my discipline would then go. So I'd have a good little run, then my discipline would then go. So then I'd think, oh, well, gold looks good, I'm going to go and trade that or whatever. Oh, it doesn't matter if I lose a little bit, because I'm just going to be giving back some of my profits that I've already made. And but the problem was I would then give all the profits back. So for me, discipline was a big thing. And then what would happen is, once I give the profits back, I'd tighten up again, trade with better discipline, and then be more profitable. And it took several cycles of that to happen before I realized, and then thought, okay, if I can focus on maintaining that discipline much, much more of the time, then I'm going to be in a much better position. So that was one of the big light bulb sort of moments for me. Um, and that, really did help my trading, when I realized that it was me getting in the way. It was like self-sabotage in a way, that I'd get overconfident. So I realized that I was a greed based trader, and I would very easily get overconfident, and that's sort of the danger zone. So um, reining it in and having better discipline was the thing that helped me. Do you believe technicals are actually stronger the higher the time frame? A little bit. Yeah, I think when you come down to very small time frames, you go down to like 1 minute charts, then there's lots of noise on the intradays, and so a bit. But the markets are also a fractal. The patterns you will see on higher time frames, you will see on lower time frames as well. But yeah, the markets can be. What's the word? But yeah, in the main, higher time frames, I think um, there's uh, less chance of just getting completely chopped up in a load of noise intraday sort of thing. Yeah. How much? How much do you recommend starting up with? High midnight. Yeah, that's a good question again, but I'm hesitating, because the answer is it depends. It depends on the individual and how much money they've got. You could have, let's say, I could have someone who says, right, I'm starting out roughly how much, and I'd say, well, how much have you ultimately got to trade with? And if they said, well, ultimately I've got £1,000 to trade with, I would say, well, if you're just starting out, probably just trade on a demo account for a short for a period. But if that person said, "Oh, actually, I've got 100,000 that ultimately I want to trade with," it might be different. I might have a different answer. In the main, the good thing is with trading the currency markets nowadays is the ability to be able to trade in very small clips. So we can trade at like 10 cents per pip of movement. So we can trade at really small amounts. But even so, I would say, as an absolute for me, if I was you're asking my advice, I'd say as an absolute minimum £1,000, preferably about three. But again, it depends on the individual. And then of that, and the reason I'm saying a thousand is because I know that I would be then also saying only risk 1% of that £1,000 per trade. So then you're risking £10 per trade. Now, if you've got a market like at the moment of the pound dollar, which has got an average daily range of, I dread to think what it is at the moment, but 200, 300 pips. Before you know it, you won't even be able to put trades on because the size of the stop loss, even at a minimum stake, will send you potentially over risking way more than £10. You won't be able you won't be able to take a lot of trades. So the more money you have in a trading account, the easier it is to trade, and trading within those risk profiles. So, but whatever you do, if you are starting out trading, one, start on a demo account just to get used to the platform, whatever platform you're using, and then move over into real money, but then just go at the absolute minimum stakes just to get used to trading with real money, before you start even going up to risking 1%. So keep it really, really small so that you can get used to the emotional side of trading. Thanks, John. Yeah, it's funny when I do these live broadcasts. I mean, cracky, I just realized we're 2 hours in. We're going to have to stop soon. But yeah, a lot of people catch up on these presentations afterwards and watch them afterwards. But yeah, yes, exactly. Safe. Yeah, most will lose doing that. Yeah, exactly. Yeah. Davey, so to become a more profitable trader, I have to become a member. I don't know, Davey. What I think the thing is with my with Charlie Burton Trading, in answer to that, which you wrote, what time is it? Oh, that was about 7 minutes ago. You wrote that. Um, is Don't underestimate the power of community. It's a bit like what we're doing here tonight. We're having a chat, yeah. So don't underestimate the power of community. So we went out for a coffee morning in London just 2 weeks ago. Obviously, only the people who are based here in the UK could attend. Obviously, I've got members all over the world, from Australia, Singapore, Canada, all over. So um, obviously they're not going to, but it's still nice for the people who can make these sorts of things. And so, and we're very much a community in the room. I've got senior traders who have been with me for over 15 years, and they run a couple of sessions here and there as well, training sessions or trading sessions. So it's very much a community of learning. And so when you say about being more profitable, then yes, but maybe becoming more rounded as a trader as well. So yeah, that's what I try to do for our members. Made a plan that waits for setups on 4 hour and then scales down to the 15 and wait there to be a setup. There too, it has a huge expectancy, but very low trade frequency. Is this good? Yeah, it could be. Yeah, yeah. Lyle, yeah, that could be. Um, yes, safe. Yeah, that's the right sort of idea. Yes. Nice to see this is still going. Thought I'd be too late. Hi, Ironclad. Oh, hi, Tolu. Nice to see you. Um, well, yeah, we're just doing the question and answers now, Tolu. So you are late. But you can get the recording, of course, anyway. Everyone make sure you like and subscribe. This is quality. Oh, thanks, Saif. Yeah. Do you take book recommendations? Yes. my favorite book of all time in the trading world is, I'm looking back, so I've got my bookcases over here behind me. Um, is Market Wizards. I think that is the very best trading book in my view. It's a book of uh, interviews with famous fund managers of the time. Um, uh, some other books that I'm trying to come up with some books which are a bit different. And so Market Wizards, the original one, the one that was written in 1987, but there's been subsequent ones after that. You could read those as well. A lot of those are good. So you've got new Market Wizards, you've got hedge fund Market Wizards and stuff like that. So those are probably the most powerful that I've read. Trading in the Zone by Mark Douglas is a classic that you should read. Um, so Trading in the Zone by Mark Douglas, and a bit left of field, one that I really liked reading a few years ago was called The Hour Between Dog and Wolf. The Hour Between Dog and Wolf, and by Steve Coates, I think his name is. And that was interesting because it was looking at how our uh, biochemistry can affect our trading decisions. So yeah, it's quite interesting, that book as well. Uh, Can tell you can't wait to jump into bed. Yeah, I'm gonna. I was gonna watch an episode of the Lord of the Rings series, the Rings of Power, whatever it's called, but I don't think it's gonna happen now. Um, Thank you, Lyle. That's very kind of you. One of your favourites. Have you read the most recent Unknown Market Wizards? Yeah, that was my least favourite. Fun enough, Bonk. um, yeah. Um, Personal view. One of the reasons why is that I think it was about three or four of the traders from that book were all from the same, worked for the same firms. They all had a very similar sort of style together. But there were a couple of nice, interesting interviews in there, but some of them I wasn't so keen on. So I did read it because I have to read sometimes these books because my members are going to be reading them. Um, but I didn't like it as much as the original Market Wizards, where you've got these legendary hedge fund managers, and even New Market Wizards as well, which was written a few years later. So, um, what is the trading frequency with your style of swing trading? How many trades per month? Can one make 20 to 30% swing trading like the way you do? Well, you've seen the results anyway, Mr. Hyman. And so, from what I've shown earlier on, so you can work that type of thing out. So, yes, that's what my job is to show and demonstrate to my members. They are taking their own trades, of course, as well, but they see me managing my own trades and positions and stuff as well. So, that's what I'm there to do. How many trades do I do a month? I don't even know. I'll be brutally honest. I don't know. I don't add that up. But actually, uh, but what I can say is that I'm very, very rarely flat and not in any positions. So it's hardly ever in the course of a year. It does happen, but usually I might only be flat for a couple of days, then I'll be into another position. So I'm almost constantly in the markets, but it's just that I'm not necessarily taking new trades every single day. But I might be in a trade, and then a day or two later I might be adding to it, and then adding some more, and so that's what I'm doing. Do you think your fitness regime helps with your discipline? I've seen interviews where you mention it. Yeah, I do, John. To an extent, I'm not as strict on the diet as I once was, maybe from what you've seen in the past when I was on the BBC. But that was specific at that time. But yeah, in the main, what I find is I do spend a lot of time sitting in my office here. So doing some exercise, I do find helps me, John. It's not necessarily discipline, helps me with discipline with trading. I think it did years ago, but I don't think it does anymore. I don't think it makes any difference. I'm disciplined anyway with my trading. I don't need to be working out in order to do that. But what working out does do is it makes me feel better. And I feel better in myself if I'm generally, doing some form of training, every week. So, yeah. No, I get you mean get what you mean there, Bonk. Yes, I agree with you on that. Yeah. Um, Hench. That's great. I like that you're transparent. Most mentors, no. Yeah, no, you're right. Yeah, exactly, Mr. Hyman. Yeah. Yeah, I'm just honest. I'm like, oh, I haven't got a clue how many trades I do. so, but, but yeah, but one thing like I said, I'm constantly in trades, so I've actually been lightening up trades. Well, like I said, myself and my members, we closed out of the last of our euro shorts literally down near the lows yesterday morning, as I said earlier on, and that was a bit of luck. It wasn't because I'd been targeting this 96 zone. 96. That's all comes from the technical analysis that we do in the room with the members. So we'd been targeting that zone anyway, and it was down at 95.59. And I said, right, that's it. I'm cutting the position. We've done enough. I'm not looking for any more. And there are reasons why. Why at that point. Um, like I said, I'm using technical analysis, fundamentals, and sentiment as well. And sentiment was getting very, very frothy. So towards the dollar at that point in recent days. So um, uh, so yeah, so I'm out of the short side now of euro dollar. I can say that much to you, but I'm not going to tell you what my intentions are. Like I said, because I've got other trades on, and I always say it's not fair on my members who are paying members if I start giving out free trades sort of thing. So I won't do that sort of thing. Um, Attard, the most honest mentor. Oh, that's very kind of you. You've watched almost all of your videos, and your words have stayed. Oh, that's brilliant. Consistent over the years. Yep, yep. No, that you're right. Yeah, I'm very. Yeah, I don't change, and yeah, my general approach to trading, and what traders do, and the things that they do that are wrong, the things that they do which are right. All of that pretty much stays the same. Do you play any golf? I used to, Lyle, but I haven't played for probably a good few years, actually. Too busy. Um, how are your monitors fixed? One hanger per. Yeah. No, one of these. Yes, per two screens. So I've got three stands here. So there's three stands, and then there's two screens per stand. I think I probably ordered them off the internet when I ordered them. Might have been my computer guys. I can't remember. I've had them for years. I'll be honest with you again. Most of the time, I don't have the top screens on anymore. I don't need them because I'm not day trading most of the time. I don't need six screens. So most of the time, I don't actually have the top screens on. Um, what's the fastest you've ever done in your cars? Don't worry, I won't tell anyone. I'm not saying anything about that sort of thing. So, okay, not answering that. Favorite car? Well, I only have one car at a time, Lyle. I don't have, my wife has a car and I have a car. Yeah. Um, my favorite car is always the current car. I've had Porsches over the years. I've had about a good few of those. And then I've had, an SUV in the last couple of years, which I've loved. Really, I know it's really, I shouldn't say that, but it's just comfortable. But that's not what I have now. And so I have got a more of a sporting car again. So, yeah, whatever the car is that I currently have is usually my favorite. but they're all enjoyable over the years for various reasons. At the time, really, the car becomes part of your who you are at that time, I think. And outright sports cars, I'm not interested anymore. I love sports cars, but I'm not. You know, um, I'm getting too old. They're too low down, so I don't don't go for outright sports cars anymore. I'm just going to give it 60 seconds and see if there's any responses here, and then we'll start wrapping up. Loved it when you said on the BBC that you bought the Porsche and it was better to ask forgiveness than permission. Yes, I know. Yeah, yeah. But that was true actually. I genuinely, when I got that was my first Porsche. That one, and I never told my wife until it was in the garage. And she came home one night. I said, "Oh, I just want you to show you something in the garage," and it was in there. So that was genuinely. I didn't have to ask for her permission, but still, it was. I used to find it funny that I used to just buy a car and say, "Oh, look, I've got this car now," sort of thing. So yeah. Any chance you're coming to America anytime in the future for a seminar or anything? Hi, John, again. I do occasionally get asked to go to events, but off the top of my head, I don't think there's anything in the US. Sorry on that. I do a few in London, but unfortunately, unless you go and arrange one, John, and I'll come over for you. Um, how soon should you scale up risk to compound the account? That's a good question. Again, um, when you say scale up risk, I don't. That's what I'm saying. I don't know. A good question because I don't quite know. You don't really want to scale up risk. What you do is you'll always have a benchmark of how much risk you want to, what your maximum risk is. So let's, for argument's sake, use that 1% rule again. But let's say you've started at a quarter of a percent. Maybe that's what you mean. And you're like, well, at what point do I go from risking a quarter of a percent to to 1%? So maybe that's what you're meaning. Only you will know. There isn't a definitive answer. You will know when you're ready. Um, a bit like I used a Star Wars analogy earlier on. When you're ready, you will know. And so, yeah, it's the only really answer I can get there. Yeah, indices just a little move there. How do I win in trading? I've been watching videos, invested, tried my hand, and it's been over 2 years, but I can't seem to be profitable. What would you recommend? I'm highly determined. Um, I think when someone's like, and this is very difficult for me because to answer, because my natural answer is going to say, well, just join my community. One of the best things you can do. But of course, but then you might say, well, yeah, you're bound to say that, Charlie. So I can't win, can I? But if you've been trading for 2 years and you're still struggling, that would be the sort of typical sort of member that comes to Charlie Burton Trading. Is they've been at it for a while, they've tried a few things, they've been on some seminars, they've read some books, they've been on websites, and they're not getting anywhere. And so that would be the typical sort of reason why a lot of people will come to my community. Some just come because they're actually quite competent anyway, but they want to be part of a community and they enjoy the interaction as well. So there's all sorts of reasons why people first come, but a lot of the time that's a typical sort of reason why people would come to my community. So the only thing I can say, if you're not going to join my community, is just keep sticking at it. Just keep at it, because whatever you're doing obviously is not working for you right now. Keep working at it. But anyway, I feel stuck. Really, maybe not following the correct guidance. Yeah, that sounds like it might be the case there, Innes. Um, Oh, an ultra wide curved screen. That does sound nice, Ben. When I next change my screens, I will go for just a one bigger screen, probably. Um, Thanks, Safe. He's gone. Uh, I'm trying to catch up with, um, and I'm going to have to go soon because I'm getting really tired from staring at the screen. Actually, reading all these questions, which is lovely, but I think I'm getting there. Yeah. Okay. Let's call it a night, guys. We've been 2 hours and 15 minutes, and I very much appreciate so many of you staying here through this chat we've had. If you missed the early bits when I was going through the accounts and stuff, by all means, you can get the recording. But other than that, I always say it, I should do these more frequently. I will endeavor to do another, even if it's not a trading challenge update on YouTube. We can always do another session like this, these live sessions, maybe in a month or two's time. The best advice I can always give is please trade safely and please respect your risk management. And that's the best advice I can always give. Take care for now, and do remember, yeah, there's a an incentive to join us at the moment as well, if you're interested in joining us and checking out what we do. Other than that, I shall see you on the other side. Enjoy the rest of your days, evenings, or mornings, and no doubt I'll see you on YouTube again soon.